Hey everyone, and welcome back to the AI Tech channel. Today, we're diving into a question that's been burning in the minds of investors everywhere. Palantir versus Nvidia. Which one is the better AI stock by right now? Is Nvidia's dominance already priced in, or is Palantir's targeted AI approach the smarter long-term play? Forget the hype for a minute. We're going to break down the real value, the real risks, and the real potential of these two AI powerhouses. Stick around, because this could change how you invest in the future of AI. The AI revolution is here, folks. It's not some distant future anymore. We're seeing AI transform industries left and right, from healthcare and finance to manufacturing and defense. The numbers don't lie. IDC projects global AI spending to explode to over $300 billion next year and keep growing at over 25% annually through 2028. That's insane. But here's the thing. This growth is creating massive opportunities, but also some serious competition. Even with challenges like DeepSeek's advancements in AI training efficiency, the big players like Meta, Alphabet, and Amazon are doubling down, planning to pour billions into AI infrastructure. Meta alone is looking at a $65 billion investment in 2025. The stakes are incredibly high. Let's start with Palantir. What exactly is Palantir? They're not building AI chips or training massive models. Palantir specializes in data integration, analytics, and AI-powered decision support. Think of them as the guys who make AI useful for complex organizations. They have two main platforms, Gotham for government and defense, and Foundry for commercial enterprises. Both platforms take messy, disparate data sources and turn them into actionable intelligence using sophisticated AI algorithms. What sets Palantir apart is their focus on AI for the real world. They're not chasing general AI. They're building systems that combine human judgment with machine learning to solve concrete, operational problems. They've nailed government contracts, providing a stable revenue base with high switching costs. Once an agency is using Gotham, they're pretty much locked in. But their commercial business is really starting to take off, especially in industries with complex physical operations and supply chains. And then there's their artificial intelligence platform, or AIP, launched last year. This is Palantir's direct play in the generative AI space. It allows organizations to securely connect their proprietary data to large language models while maintaining control and governance. This private AI approach is huge because it addresses the data security and intellectual property concerns that have been holding back enterprise AI adoption. Think about it. No company wants their secret sauce leaked to the public domain. Palantir is providing a secure vault for that data while still unlocking the power of AI. That's a game changer. Now, let's talk about Nvidia. Founded back in 1993, Nvidia started as a graphics processing unit, or GPU, manufacturer, mainly for gaming. But over the past decade, they've completely transformed themselves into the dominant provider of computational infrastructure powering the AI revolution. Their GPUs, initially designed for rendering graphics, turned out to be perfect for the parallel processing requirements of neural networks and other AI algorithms. It was a stroke of genius, or maybe just incredible foresight. Nvidia's business model spans both hardware and software. Their primary revenue comes from selling specialized chips, especially their data center GPUs like the H100, H200, and the newer Blackwell series. These chips have become the industry standard for training and running sophisticated AI models. They're the gold standard, the top of the line. Everyone wants them. And their latest Blackwell architecture is mind-blowing, offering performance capabilities that are 30 times faster than previous generations for AI inference tasks. Nvidia is not just maintaining its market leadership, it's extending it. Beyond AI, Nvidia still has significant gaming, professional visualization, and automotive technology businesses. But their data center segment, fueled by AI adoption, has become their most prominent and fastest-growing revenue source, contributing nearly 88% of total revenue. Let that sink in. With a staggering market capitalization of over $3 trillion as of early 2025, Nvidia has captured an astounding 98% market share in the data center GPU market. That's not a typo. 98%. They're benefiting from their technological leadership and the network effects created by their extensive software ecosystem. It's a virtuous cycle. The more people use Nvidia, the better their software gets, and the more people want to use Nvidia. So, how do these companies actually use AI? Palantir's strength lies in making AI operational and accessible to organizations that lack extensive technical expertise. Their AIP enables clients to implement generative AI and other advanced capabilities within their existing data environments. They're focusing on that last-mile problem of actually deriving business value from AI. It's one thing to have the raw AI power. It's another thing to actually use it effectively. What distinguishes Palantir is its focus on AI orchestration rather than fundamental AI research or development. They're not inventing new AI models. They're building systems that integrate various AI models, even those from other providers, with an organization's proprietary data and workflows. This positions Palantir as an AI solutions provider, helping clients navigate the complexities of implementation and achieve measurable outcomes. They're like the AI consultants that every company needs. And get this, Palantir is uniquely positioned to capitalize on emerging frameworks like the Stargate AI project. Why? Because of their specialized expertise in integrating disparate systems and data sources. As these frameworks enable more AI systems to communicate and share capabilities, the complexity of managing these interactions within regulated, security-conscious environments increases dramatically. Palantir's proven ability to build mission-critical systems that maintain governance while enabling powerful analytics creates a natural entry point for them to become a key implementation partner for enterprise AI deployments. It's a perfect storm of opportunity for Palantir. Now, let's look at Nvidia's AI capabilities. Nvidia is the fundamental enabler of modern AI. Period. They provide the computational infrastructure on which virtually all large-scale AI development depends. Their GPUs have become the de facto standard for training and running sophisticated AI models, with the company maintaining a commanding market share exceeding 80% in AI accelerators. This position gives Nvidia unparalleled influence over the direction and pace of AI advancement. They're not just selling chips, they're shaping the entire AI landscape. But it's not just about hardware. Nvidia has developed a comprehensive software ecosystem, including CUDA, their parallel computing platform, various AI frameworks and libraries, and specialized tools for different AI applications. This combination of hardware and software creates significant competitive advantages and switching costs. AI developers and researchers build their workflows around Nvidia's technology stack. It's like being locked into the Apple ecosystem, but for AI. Once you're in, it's hard to leave. Nvidia's influence in AI continues to grow through strategic initiatives like the CUDA ecosystem, enterprise-focused AI systems, and partnerships with major cloud providers. They've evolved from simply selling chips to offering complete AI systems and development platforms. It's a full-stack solution. Let's talk money. Palantir has demonstrated accelerating growth and improving profitability in recent quarters, achieving GAAP profitability for 6 consecutive quarters as of Q3 2024. They reported revenue of $2.4 billion for the trailing 12 months, representing year-over-year growth of 27%. This growth has been driven primarily by commercial sector expansion, with U.S. commercial revenue growing at approximately 40% year-over-year, substantially outpacing government revenue growth. They're finally breaking free from their reliance on government contracts. Their gross margins remain robust at approximately 80%, reflecting the software-based nature of their business. Operating margins have improved significantly, reaching 20% on a GAAP basis, as Palantir has reduced stock-based compensation and scaled its business. The company's customer count continues to grow, particularly among commercial clients, surpassing 300 as of the latest reporting period. Things are looking up for Palantir financially, but the stock has experienced significant volatility in early 2025. After surging to record highs following strong earnings in early February, the stock retreated sharply amid concerns over potential U.S. defense spending cuts, tumbling 30% from its peak. That's a wild ride. Despite this pullback, PLTR remains up 17% year-to-date and has quadrupled in value over the past year, reflecting strong long-term performance. Analysts are divided on the recent sell-off. Some view it as a buying opportunity, given Palantir's central role in federal data initiatives. In contrast, others point to technical indicators suggesting further downside risk if key support levels fail to hold. It's a stock that requires a strong stomach. Now, let's look at Nvidia's financial performance. They've delivered exceptional results, establishing themselves as one of the market's strongest growth stories. In their most recent quarter, Nvidia reported record data center revenue of $30.8 billion, representing a 112% year-over-year increase. That's more than double. Total revenues reached an all-time high of $35.1 billion, up 93.6% from the previous year, while net income grew by 108.9% to $19.3 billion. These numbers are just staggering. The company's gross margins have expanded to approximately 72%, reflecting Nvidia's strong pricing power and the premium value of its AI chips. They can charge a premium because they have the best product. Operating margins have similarly improved, exceeding 50% on a non-GAAP basis. Net income has grown even faster than revenue, with trailing 12-month earnings growing over 150% year-over-year. Nvidia is a cash-generating machine. Their stock has demonstrated remarkable strength, surging over 130% over the past 52 weeks and significantly outperforming the S&P 500. However, the stock trades approximately 11% below its early January 2025 record high, following concerns about DeepSeek's technological breakthrough. Current market sentiment remains decisively positive, with most analysts maintaining strong buy ratings on the stock. The mean price target suggests a potential upside from current levels, reflecting continued optimism about Nvidia's growth prospects. The market still believes in Nvidia. So, what are the AI trends that could benefit these companies? Palantir stands to benefit significantly from the enterprise AI implementation gap. As companies increasingly focus on deriving measurable business value from AI investments, Palantir's expertise in creating practical, production-ready AI applications positions it well to capture this growing market. Their AIP platform addresses that last-mile problem in AI adoption. The company's private AI approach addresses critical concerns around data security and intellectual property that have limited enterprise AI adoption. By allowing organizations to securely connect their proprietary data to large language models while maintaining control and governance, Palantir offers a solution that balances powerful AI capabilities with enterprise requirements for security and compliance. It's a win-win for companies that want to use AI safely and effectively. Palantir is positioning itself as a critical middleware layer in emerging AI ecosystems, helping organizations safely expose their data to interconnected AI systems while maintaining security and compliance. With accelerating commercial adoption, improving financial metrics, and a long track record of successfully implementing complex systems integration projects, Palantir represents a higher risk but potentially higher reward opportunity to invest in the infrastructure layer that will enable practical AI implementation across enterprises and government agencies. They're betting on the future of interconnected AI. Now, let's look at Nvidia's growth potential. Nvidia's position as the foundational infrastructure provider for AI development gives it unparalleled exposure to the growth of the technology. As AI models grow larger and more sophisticated, the demand for advanced computational capabilities continues to increase, benefiting Nvidia disproportionately given its dominant market position. The company effectively captures value from the entire AI ecosystem rather than competing within specific application segments. They're selling shovels in the AI gold rush. The company's technological lead appears substantial and sustainable, with its newest Blackwell architecture maintaining performance advantages over competitors. CEO Jensen Huang's recent comment about insane demand following Blackwell's broad release suggests a strong market reception. Major customers' aggressive infrastructure expansion plans further support the outlook for sustained demand growth. Nvidia is not resting on its laurels. They're constantly innovating and pushing the boundaries of AI computing. And here's a surprising fact. Nvidia's current valuation metrics, including a P/E ratio of 40x, represent a discount to its 10-year average P/E ratio. Based on forward earnings expectations for fiscal 2026, the stock trades at an even more attractive forward P/E. This valuation gap suggests significant potential upside, as the stock would need to appreciate significantly just to trade in line with its historical average P/E ratio, assuming current earnings forecasts prove accurate. Nvidia might actually be undervalued right now, but it's not all sunshine and roses. Both companies face significant risks that investors should carefully consider. For Palantir, competition from established enterprise software providers and specialized AI startups represents a growing threat. Major cloud providers increasingly offer AI implementation and orchestration tools that overlap with Palantir's offerings. The company's exposure to government contracts, particularly in defense and intelligence, creates vulnerability to policy changes and potential defense spending cuts, as evidenced by the recent stock volatility. Palantir is not immune to political and economic headwinds. Palantir also faces political and reputational challenges related to its government work. This association creates controversy in some markets and may limit its commercial expansion in specific regions or industries. The company's relatively high valuation and recent stock volatility leave little room for execution missteps, with any slowdown in growth likely to result in significant share price fluctuations. Palantir's success depends on continued growth and flawless execution. Nvidia faces different but equally substantial risks. The emergence of efficient training methods could potentially impact demand for high-end GPUs, particularly if similar approaches gain widespread adoption. While major customers suggest that any training workload reduction could be offset by increasing inference demands, as newer AI models require more computational power for operation, these evolving dynamics create uncertainty. The AI landscape is constantly changing, and Nvidia needs to stay ahead of the curve. Competition in the AI chip market is intensifying, with both established players and startups working to develop alternative solutions. The global semiconductor supply chain remains critical to Nvidia's ability to meet surging product demand. While the company has successfully navigated previous supply constraints, maintaining sufficient manufacturing capacity and efficient distribution channels will be crucial for meeting ambitious growth expectations. Despite its strong position, Nvidia's high valuation leaves little room for execution missteps. Nvidia needs to maintain its dominance in a rapidly evolving market. So, which AI stock is the better buy? Palantir and Nvidia represent compelling but distinctly different AI investment opportunities, with the better choice depending mainly on investor priorities, time horizons, and risk tolerance. For investors seeking exposure to the foundation of the AI revolution with proven financial results at a massive scale, Nvidia represents the more precise choice. Its dominant position in AI infrastructure, exceptional financial performance, and continued technological leadership make it a core holding for those looking to participate in AI's growth trajectory. Nvidia is the safer, more established play. Nvidia's broader diversification across multiple segments provides some insulation against volatility in any single market. Its exceptional margins and cash generation offer downside protection, while its proven ability to execute at scale reduces operational risk. Despite a premium valuation, Nvidia's market position, technological moat, and the multi-year growth runway for AI infrastructure suggest continued strong performance, with analysts expecting significant year-over-year EPS growth for the coming year. Nvidia is a solid choice for long-term investors. Palantir offers a compelling alternative for investors seeking a smaller company with potentially higher growth upside and more direct exposure to enterprise AI adoption. Its improving financial profile, accelerating commercial growth, and positioning as an AI solutions provider rather than a pure technology creator differentiate it from other options in the space. Palantir's focus on making AI operational for organizations provides exposure to the last mile of AI implementation, representing a substantial market opportunity as enterprises move beyond experimentation to production deployment. Palantir is a riskier but potentially more rewarding investment. Ultimately, the choice between Palantir and Nvidia depends on your individual investment goals and risk tolerance. Both companies are well-positioned to benefit from the long-term growth of AI. But before you make any decisions, do your own research and consult with a financial advisor. And now, I want to hear from you. Which AI stock do you think is the better buy? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the AI tech landscape. Thanks for watching.